So let's think about the opportunity for corporations going forward. And maybe we can think about it in concentric circles. The first one being companies that already have a Bitcoin strategy. The second one being technology companies. And the third one being just generally publicly traded companies. So what's the case for companies that have a Bitcoin strategy? Bitcoin miners, companies that may be publicly traded, that have Bitcoin ETP products, companies that have Bitcoin custody or exchange solutions. What is the case for those companies to put Bitcoin on their balance sheet as a starting point?
You know, the way I think of it, I start with Bitcoin miners. The public Bitcoin miners, the case for them is they should be issuing convertible debt and equity, and they should be buying Bitcoin because they are public, they are creditworthy counterparties, they can issue securities, and they would be raising money, equity, or cheap debt capital and investing in an asset which is going up, historically 40% a year or more. So that's very accretive for their business strategy. Their shareholders are already long Bitcoin. You have to believe Bitcoin is going up and not down to invest in a Bitcoin miner, right? There is no Bitcoin mining business model that works unless Bitcoin goes up in price. And if Bitcoin goes up in price more than 1% or 2% a year, then convertible debt is accretive and equity is accretive. So that's a fairly straightforward case, and fair value accounting makes it even easier, I think. I think the next class is Bitcoin exchanges and custodians. And for public ones, a Coinbase or whatever, well, you're in the business of convincing other people to buy and custody Bitcoin. And so for you to be buying Bitcoin quarterly and custodying Bitcoin, your own Bitcoin, sends a message to your customers that you actually believe it's a treasury asset and that it's safe with you. You can't really, in good faith, recommend someone buy an asset that you think is so risky as you don't want to use money to buy it, if you're going to be a custodian. So I think Block and Jack's putting his money where his mouth is right now, and he's rolled out a product to allow all the small, mid-sized businesses that work with Square to dollar cost average into Bitcoin. And then, Square the product, but Block the company is now doing the same thing. Right, and it illustrates that, you believe in your own product, you support your own ideas, and, you're a trustworthy exchange and custodian to do it, and then you're showing people how to do it. I think that any other exchange, whether they're private or public, benefits. A public company, it's kind of an easy thing because public companies can issue equity and convertible debt to do it. For private companies, private custodians, private exchanges in the Bitcoin, community, my advice to them, and many of them have taken this advice. I mean, I think Alex Leishman showed today that he's doing it. You allocate some portion of your treasury to Bitcoin, and B, if you don't have enough, instead of raising $50 million in venture capital to fund operating losses or operations, you raise $200 million in capital and you put $150 million into Bitcoin and $50 million into operations. Because if you believe that Bitcoin is the future, then it's obviously accretive. And if you don't believe Bitcoin is the future, you should quit, sell the company, and get out of the business. Who wants to do business with someone that's selling something that they think is going to zero, right? You've lost your moral standing to be a vendor in the space if you don't support the future of the asset. There's a second order subtlety here, which is for public companies, the convertible debt markets really like a highly volatile asset. So if you're a miner and you issue convertible debt and you buy Bitcoin, then your equity becomes more volatile, then it becomes more liquid, then the options market comes to life, then the convertible debt comes to life, then your enterprise value grows, then your market cap grows, your premium expands, you can do it again. So this is this is the opposite of dilutive and risky. This actually de-risks the business strategy and is accretive if you're already long Bitcoin, as say a Bitcoin miner, and you're public. It's the way to get yourself out of a rut. If you're a private company, you have a bunch of VC and they want to invest money in private companies, but a venture capitalist would much rather invest $200 million 5 times than invest $50 million 20 times. It's just as much work to invest $500 million as it is to invest $25 million. So the real problem with VC is what's the use of proceeds? They have access to infinite capital. If you can generate a return more than the cost of capital, if you can beat the S&P index, you can raise billions and billions of dollars. There's infinite money. SoftBank illustrated this. So it's not hard to get the capital. The problem is, what do you do if someone gives you $100 billion in capital? And they did WeWork, right? And you can see the problem is you over-invest in bad ideas, right? Investing $20 billion in WeWork, doesn't work out that well. But actually, you could invest $20 billion in Bitcoin, and it would work out just fine. So if you're a private company and you have a Bitcoin treasury strategy, you actually can solve 2 problems for your venture capitalists. One problem is you give them a use of proceeds, which is highly accretive, that beats the S&P index. And while they're waiting to get paid, they get 2% management fee and 20% carry. And that's a screaming home run. So that's one problem you solve. But the other problem you solve is that some people don't want to take 1-for-1 upside and downside risk. So if you're a private company, you can actually issue a participating preferred stock, which looks like a debt instrument that you don't have to mark to market. So an investor can basically invest in Bitcoin, get the upside of Bitcoin, not get the downside of Bitcoin, have a guaranteed PIK or a guaranteed accounting benefit. And so that really appeals to someone with an investment portfolio. It solves the problem for the limited partners. They don't have the volatility. It solves the problem for the general partners of the VC. And then you're the entrepreneur and you've got a Bitcoin exchange business and you want to compete with Fidelity and Goldman Sachs and Coinbase. It might work. But then again, it's kind of hard to compete with companies 100 times as big as you. So if you pursue the strategy I just articulated, if the business succeeds, you make a ton of money. And if your operating business fails, you still make billions and billions of dollars. So you make a ton of money if you fail, and you make a ton of money if you succeed. And the people that invest in you make a ton of money. And the people behind them don't have the volatility of Bitcoin. They just get gains on Bitcoin as everybody's winning. So who's losing? And the answer is, with digital capital, nobody's losing. And so that works with a private company. It works with a big private cash cow, like a $500 million utility company or trucking company or something. You just do it with private equity and not venture capital. It works with a mid-size miner. And then if we go on to non-Bitcoin companies, the world's full of zombie companies. And here's a zombie company, a company with $500 million in revenue that makes $80 million in cash flow, growing 0 to 5% a year, and it has $2 million a day of its stock trading. Is dead money, no options, $2 million of stock, and is valued at 1 times revenue. Now, and it has a little bit of cash. It has hundreds of millions or $500 million in cash. So what kind of company is that? Okay. That's a zombie. What's your future? You don't have a future. Why do people not trade your stock? Because nothing interesting happens for a year. You can check in once a year. Why would I buy something that I can predict the future of it? Will it go bankrupt? No. Are the options valuable? No. There's no volatility. The options are worthless. So you're gonna comp your employees in stock options? Good luck with that. The stock options are worthless because the options are worthless, okay? Who was that? That's us. I'm describing MicroStrategy in March of 2020. That was our company. But, and so how do we get ourselves out of that situation? If you're a zombie company like that, you go to a investment banker like Goldman Sachs or Morgan Stanley, and you say, help me, their answer is you need to do a transformational deal, a transformational acquisition. You either need to do a merger or you need to use your cash to buy a high growth company growing 20% a year, and then you get some growth back into the stock. So you got to go do a deal. But it's hard to find an easy deal to do for $500 million where the thing you're buying is going to go up 20% a year, where you can actually integrate it. And so what is that thing? Well, that's Bitcoin. Bitcoin is the universal merger partner. So you can merge any zombie company with Bitcoin at 200 million scale, at 100 million scale, at a billion scale, at 2 billion scale, at 20 million scale. And it's actually reversible. You can merge in 20 million, you can reverse it, you can test it. And what happens is you take a $600 million company with $10 million of stock trading a day, and you buy 100 million of Bitcoin. The stock gets attention, it starts doubling, it gets volatile. Oh my God, the Bitcoin traded down 20 million, it's up 20 million. They had like 1 year worth of bad news. And everybody sells it, but then you have 1 year worth of good news the next day and everybody buys it, and now the stock trading triples. Now the options come to life. Now the employees are getting paid. Now there's a future. Now you can raise, you know, it's this conundrum I laid out. If you're conventional, you make the volatility go away, you give away the capital, and if you need money, you pay 10% interest for junk bonds. Like, that is when you need the capital, you can't afford the capital, right? Isn't that perverse? If I give up my capital and when I need it, I pay 10 to 12% interest, right? On the other hand, if I reverse it, I buy some Bitcoin, I get the volatility. What does it matter? If the volatility comes from Bitcoin, it doesn't matter. Now, the volatility, the stock goes through the roof. The cost of capital goes through the floor. Now, when you need to borrow $500 million, you don't even need the money. So, of course, the market gives it to you for free. Right? So you can either be rich and have money for free and have high volatility and high option value and have 100 years worth of operating losses. And that's one strategy. That's the MicroStrategy, right? That's what we did. That's the Bitcoin strategy. Or you can do the opposite. You can be a zombie company and you're dead money. And so I think that we're more likely to see the mid-sized zombie companies, the $500 million revenue, the $1 billion revenue company with $5–10 million of stock trading a day. We're more likely to see them limp into Bitcoin, post FASB, than you will see the super marquee best run companies, because they feel like they don't need anybody's help. But these other companies, there's 1,000 companies that are mid-size, mid-cap. The Russell 2000, right? The #1 performer in the Russell 2000 was Supermicro. The #2 performer was MicroStrategy. And the two companies are like 35% of the return on the Russell 2000, right? So what about the bottom 1,000? They're public, right? So I think that's the next interesting development and opportunity here.